Turning on my do not disturb for an hour. I want you guys to fully know I don't get paid to do this. I gotta turn down my volume. Hit the thumbs up button if you haven't already. I'm about to do that because I noticed there's a lot of not thumbs up, and I'm going to remind myself to do that. Here's your pre-market movers. And I can't believe one that I saw yesterday is not on this list. Let's go to Active Trader Pro. I think it's LUNR. Let me look real quick. LUNR. This is total. James, Zephin, if you guys log on, this is your thing right here. Let me start the podcast. This thing went from 35 to 135 yesterday. I was shocked. I was shocked. And I'm trying to do a quick podcast today because I want to get out and walk before it starts raining. But and I noticed nobody's up to 8:02, so it's early. Let's get my notes up, and we'll scroll to the bottom. We're going to start doing some scans. I'm going to go back to Safari View. I posted a video last night, too, of Boyle. And, I got to put that in here. Let me make sure. Cross up on 65-minute. Cross up on 4-hour. It crossed up on both. Boom. Let's go into here and let's do some scans. Market scanner. I also am in the process of creating a new algorithm, PanW, which we should absolutely look at. That's in our core investments as well. And that's the only one that's crossed up. Energy names. Boyle. It's down 2.88%. There's somebody who posted in the private Facebook group who's in big on Boyle. It's a little bigger than I would feel comfortable with right now, because I do think long-term Boyle goes to 2. I just don't know that we're not actually at App Harvest. God, I love this. I love the company. Hate the stock. But it's going to hug that 200-day. So you're going from 93 cents, but their earnings are coming up. Oh, and they never do well on earnings, especially in this environment. Boy, this could be. I'm going to bring this one up. APPH. I love this company. Just hate the stock. They grow organic and fruits and vegetables in a controlled environment that is more optimal for the environment. Pins crossed up. This could be a nice little comeback there. I like that one. Lift. Oof. That's an interesting one. Beyond crossed up. Yep. I'm not bringing that one up. PanW, I should take that out of the not owned one. 5 are crossed up after earnings. I'm not bringing that one up. That's way too far over the 200-day. Although, I think there's a gap back here if I remember correctly. Nope, I guess not. I think this is the gap that I was looking at. 40. Good morning to everybody. Everybody listening, if you logged in, hit the thumbs up button, please. I need NVIDIA. Look at NVIDIA's up 10%. The VIX is at 21. It's down. Not owned. Okay. Then we're gonna go to all ARC holdings. She just bought a ton of coin. Berkeley, Gurman. Well, that's an interesting cross up after earnings. I'm an Apple Watch guy. I was on a hike with a couple of Garmin folks the other day, friends. Insight, don't like that one. Vertex, I just don't know pharmaceuticals that well. Fiverr, oof. I mean, that's super rich up there. MGA. Pins, I like pins. I like Pinterest to go back to 27. PTNR. Wix. Wix is an interesting one. A little too far over the 200-day. Not making money. Don't want to chance it, so I'll bring that one down. We're going to go to the Dow 30. Dow 30, nothing. Nothing crossed up on the Dow 30. That's interesting. Let's go back to NASDAQ 100, which I'm sure I'm going to get a ton of. Then we'll go to the S&P 100. Ooh, just Vertex. Do I like... I mean, this chart is just... There's nothing great about it. Their earnings were 376 versus 401. I mean, it's kind of all over the place, but it's just too rich. I mean, that's a 4-hour candle. That's not even like a weekly or something. It's just too rich. No. We're going to go to the S&P 100, and then we'll go to the energy sector. I've got two energies that I am buying in a big portfolio today. Big boy buys. Medtronic. Huh. Went over that one yesterday. It's a secondary cross-up, I believe. I'm not... You know what? I probably should bring it up. Because there's gaps up above there. This is a COVID... I mean, had we hit the bottom like in October, December, the October bottom, you still kind of rallied into October. I don't like it. No, I just don't know enough about the medical space for Medtronic to know, yes, if Tesla can basically make ventilators during an emergency, what makes me think that somebody else can't? Probably not as good as Medtronic, but, I mean, you're making life-saving equipment there. I think PXD, Camber Energy. Boy, this is a retail favorite, I believe. I've looked at that one before. What happened? Did they have earnings or something? No. They're up 2%, but I think that's just because oil's... I mean, everything's up. Everything's up. The only thing that's down, Costco under 500. Okay. I am going to start the podcast. Nobody said anything on Facebook yet, so we're going to take you guys. I'm going to look at Boyle. Put on Boyle here. This one's up. Did PXT beat? I didn't even look. I have PXD as one that I'm buying. Morning, Zephin. And by the way, good morning, James. PXD, they're at 209. I'm going to buy them at 209. I'm just going to buy PXD. I was just waiting on earnings, but I think, I think it's a good one to buy. Somebody, by the way, in our private Facebook group, I forget who, they went all in. Or I think it was on YouTube. And Zephin, I know you watched that video. Zephin's my hype man. So if you ever watch The Pimp, I forget his Snoop always has this guy in a neon colored suit, Pimp Jim or something. I forget his name. Oh, I can't take your call right now. Let me tell him. Hold on one second. I got to... usually till about 10 a.m. You're my hype man. Sorry. My buddy works for Tesla, and he is calling me about my parents' Model X. So, when you're a good son, you do things for your parents. As much as my parents did. They are fun. Okay, let me go to Strategy Tester. What am I going to talk about? I'll talk about NVIDIA earnings. Let's go to NVIDIA. This has just been a crazy. I'm going to go to the 4-hour algo. By the way, this is an 8 EMA crossing a 21 EMA algo, which got you back into NVIDIA at 162. Look at that one. Now it doesn't. So far, this algorithm doesn't outperform just buying and holding. So I'm working on it. I'll take a look, James. I'm trying to get out before the nice weather today is happening around before 2 o'clock here in Atlanta. So your boy has to go and enjoy the day. I don't get paid for this. I was gonna make mention. Here's the thing, and I'll bring this up on the podcast. I don't get paid for this. I get affiliate when you sign up for TrendSpider. I do get a portion of that. When you sign up for Visible, I get help with my own phone bill. How else do I get paid? I do get paid off of the ads on Anchor, for Anchor, and like when they play Carvana and when they play Melly and stuff like that. I get that. REI, man. REI was just, REI was one that, if you remember, James, REI, I had no allegiance to REI other than I love the outdoor store. And I didn't know anything else about it. I was hoping that you guys would make out on this one, but with their earnings coming up, what's ironic is that the 4-hour algorithm that I have, it actually makes you 34% versus just buying and holding the stock loses you 11%. But I think it's on this run-up kind of thing where you got 20%, you got 24%. I think those kinds of run-ups, 16% here, 34% here. I think those kinds of run-ups where it got you in is really, look, this is a reverse head and shoulders. Well, no, not really. There's a shoulder, there's a head, and the next shoulder should have come, but it just never did. But yeah, let me, I know. That was where I was going with the 233, 235 around there. That was where I was going was, hey, even the 273, I think maybe I brought it up on this 273. No, I think I brought it up on this 235 one. I mean, it scanned on the energy sector, so I'm going to start it out with NVIDIA. Okay. Good morning. It is Thursday, February 23rd, and I'm starting early today because the weather is going to be nice. Let me start this out with your boy is on week 4 of walking/running at least 10 miles a day. My body is giving out. I know I brought that up yesterday, but I wanted to bring it up. Everything that I'm going to say is in the notes below if you're listening on YouTube or if you're listening on a podcast. So when I go over numbers, it's all down below. Specifically on this one, NVIDIA blew out, and I mean blew out, mentioned AI, 1,000 times during their thing. This is Hype Rally 101. And I want to make sure that everybody knows this. NVIDIA, the candlestick before the algorithm got you out. But the stock pot is up 10% in pre-market. Their guidance was essentially what popped them. They again, the AI references. I mean, I think every sentence ended with AI. They saw tons, and the data center revenue was up 11% year over year. That was enormous. So they're taking business away from Intel, taking business away from everybody. They gave semi-lukewarm guidance. It wasn't like, oh my God, we're going to blow things out of the water. But they did up their guidance, but it was considered kind of lukewarm. It's up 10%. Remember, this is a $400 stock at its height. So I don't want to say that this thing can't continue to run up because you've seen this run up. It is just very, very expensive. When we look at the PE, it's 88. The forward PE is 44. And I want to take a look at 2 specific stocks, and I'll post this down below because somebody on Twitter wrote this out perfectly. So NVIDIA, 53 times forward cash. Okay, AMD, half of that, 24 times forward cash. NVIDIA, 48 times earnings per share. AMD, 25 times earnings per share. NVIDIA, 68 times forward gap earnings per share. AMD, this is the only one where it's higher, 76 times forward gap earnings per share. So when you're trying to pick out which one you actually want, in your chips, you could buy a chip ETF and just have both of them and enjoy whatever return you have. But if you're trying to decide which chip to go with, NVIDIA or AMD, because those right now are the leaders. And understand, 15 years ago, Intel was the big boy. And Intel cut their dividend. And I told my dad, after their last earnings, when it runs back up to 30, because it will run back up to 30, sell it at 30. He sold at 30. Today it's at 24, 25, 24. I told him when it gets down to 22, he can buy Intel again. Just a great, great trade. I told him, hey, high fives over the phone, over FaceTime. When your dad tells you, hey, that was a great one, kind of get this like nice feeling. But again, NVIDIA chart is up on the screen, and you're seeing it right here. It's at 229. It's going to basically sell at 230, which is this gap right there. There's no gaps up here, but this is a $400 stock back in 2021. So I don't want to say that it's not going to continue to run because this run has just been huge. But in this environment, I would not be buying this one today. That's my first stand. Now, next, I'm going to bring up Boyle. I did a YouTube video on Boyle last night, just a 1-minute stock analysis. And I said, okay, which one do you want to buy, Boyle or KOLD? Long-term, KOLD still has the momentum. you can see Boyle is still in a 200-day. It is still pointing downward. In a 50-day, it's still pointing downward. In a 21-day, it's still pointing downward. In a 9-day, it's still pointing downward. So there's still downward pressure on this stock. This is the 4-hour algorithm. So this would be where I personally would start. And today, we get a cross up at 486 on Boyle. This wasn't there when I pointed out when I did the YouTube video last night, but 486 is the buy. In pre-market, you're trading at 475. If we hold $4 today, if we dip below $4, you can continue to think that you can buy Boyle on a bounce. But if we dip below $4 at any point in time during today on Boyle, I would say we're not in an upward trend. KOLD is still your friend. Now, would I buy KOLD? Hell no, I ain't buying KOLD. If somebody points a gun to my head and said you had to put money into either stock, I would put money into KOLD. But nobody's pointing a gun to your head and saying buy a stock. Be patient. That's part of being a good trader / investor. We're not in a race. This is, long-term that we're thinking about. We just use these as guides to try and say, okay, we think natural gas has hit a bottom. You guys saw, I posted it on Instagram last night. I essentially went in and I looked, and Boyle had a cross-up on the 65-minute candle. And we'll look at the 65-minute algo right now. This is just a simple 8-day EMA. When it crosses the 8-day, you buy it. When it goes below it, you sell it. What's ironic is Boyle had a cross up at 483 and a cross down after a 0.72% gain. So the algorithm got you out. You'd still be fine at 483. It's trading at 476, but at some point today, you'll probably get above there. But again, if we hold 4, I think that's your thing. I should go and watch the YouTube video because I show you intraday, you could have easily made 10, 15% on Boyle. It wound the day down. This one is winding the day, is going to start the day down. Will we go back up to 5 or will we go to 4? That's what you're looking for. So you're looking for a long-term kind of trend on this one. And right now on the 4-hour, I'm seeing a cross up. And remember, the algorithm is a simple MACD strategy. And you're having a cross up on the MACD. But if I expand this MACD, does that give me a 100% sure, oh my God, this is going into a bull run feeling? Hell no, it does not. Not like this back here in July where we had a cross up at, let's see. We had a cross up, I'm going to pull it back, at 44.70 in July. It got you out with a 64% gain and then another buy-in at 94. You went all the way up to 117 back in July from 44. So Boyle was your KOLD. This does not have to climb back to the 200-day. This could absolutely 100% do a reverse split, and then all of a sudden you're back at the 200-day. So just be careful with this one. I don't tend to hold this one a long time, but I did want to bring up Boyle. There was an activist letter yesterday from Dan Loeb and Third Point into Bed Bath and Body Works or Bath and Body Works. I guess the bed's out. Bed Bath and Beyond. This is Bath and Body Works, BBBY. It's a hostile proxy fight. The stock has popped on this one. It popped, and today it's down at $39. So the pop yesterday, where it closed at about, I think 41.89 is where it closed. It's down at 39. Its support is probably around 39, but you do have this gap down here that hasn't been filled between 31 and 35. Dan Loeb's Third Point says there is absolutely 100% value in this. I don't see it, but when activists get involved with the stock, it usually comes from a place where they're going to extract value out of it, and you'll see an increase in the share price. CRM, and just to kind of stay on the same theme, CRM, which is Salesforce, which your boy owns at about, I think, 180 or something per share is about my average price. I own this one. They have 5 activists who are currently pushing. Here's what I want you to know about CRM. It is super expensive. I am holding this one long term. I think it's in a retirement account. The PE is 589. The forward PE is 27. So it is not something that I think, oh my God, these guys are running a great business. It's fantastic, blah, 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 blah. They are making earnings. They are growing their earnings. This year, their earnings are expected to reduce, but they have a cost problem. This is not a demand problem for Salesforce. It is a cost problem. They hired too much. They have too much cost on the books. Benioff probably knows this. That's why you have 5 investors. So 5 activist investors who are looking for board seats. It's going to be a mess. I would say buy this one closer to the 200-day, which is around 150. But if you're looking for long-term, the algorithm just got you out with a 20% gain. This is the 4-hour algorithm. The algorithm loses you 21% versus buying and holding the actual asset loses you 28%. So, yeah. I mean, I wouldn't necessarily get into this one right now, but if you want long-term, there's 5 people who've been buying at these prices. So I don't think long-term you're ever going to lose it. I want to go over, this is a crazy day trade that I saw. LUNR, Intuitive Machines. It's a SPAC. I mean, it was a SPAC. It kind of launched and launched yesterday. LUNR is the symbol. This one traded all the way from about $10. The algorithm got you in February 15th at $10.40. It went all the way to $136 yesterday. That's crazy. It's opening up at about 96. It's up 20%. LUNR. If you want to get into a stock that's going to trade like crazy, LUNR is going to go nuts. The company didn't appear to release any news. They didn't have any SEC filings. It made its market debut on February 14th, with shares finishing the first session modestly higher, not crazy. Stock jumped 30% the next day, soared 250% on February 16th, and it's continued to just soar. But day trading wise, you can do that one. I did look at EPSN for Corey on Instagram. And I always want to put in ESPN. EPSN, which is Epsilon Energy. It's a small cap energy stock. I couldn't find anything on this one. EPSN, I don't know. Are they? Yeah, they're on. The PE is 3. The dividend is 4. Their earnings are coming up on March 22nd. Right now, the algorithm has you out. The RSI is super low at 22. Just in looking at this one, the target price is $6.60. Your price right now is $5.34. There's 5 stocks that will be winners in 2023 from January 26th. It's in that article. They're a natural gas and oil provider. There are people selling here at $7. So all last year, they sold at $7. I would say $7 is your cap. So if you're looking at buying $5.34, I would say 7. They say they blow out their earnings. It's a natural gas company. They ain't going to blow out their earnings. But say for some reason they do on March 22nd. I think $7 is where you're going. That's it. Your 200-day is at 655. So as long as you're comfortable with it continuing to go down, the PE is not crazy, again, at 3, but it's a natural gas company. You've had natural gas stuff. So, Corey, my guess would be kind of stay out of that one. It's just, it reached its 52-week low. It's just bad. I looked at it on the Seeking Alpha chart. If you want to look at Seeking Alpha, I did that one. I wanted to bring up a potential catalyst. And I think James pointed this out to me yesterday. But it came to me kind of late in the day, and I was like, oh, yeah, somebody mentioned that to me. Oxy, OXY, Occidental Petroleum. They have earnings coming up February 27th, which I think is next week. I don't know the date. But today's 23rd, so 4 days from now. They got you out at about 64. The algorithm got you out. It got you in at 64, got you right out with a slight loss at 64. There's a gap here between 61 and 62. You're trading at 58. This is simply going down based on some just oil. I mean, oil is dropping, so Occidental's dropping. I tend to think that it's too low. Is Berkshire getting out of this? Berkshire is reporting BRK.B. They report on I don't know when they report. I think they report something like Friday or next week. But I wanted to bring up Oxy because it's under 60. I've always said 60 is kind of your pivot point on Oxy, just like Devon. 60 is your pivot point on Devon. Devon is up at 54. I'm going to buy more of both of these today. The other one that I'm going to buy is PXD. PXD has too good a dividend, and you can look it up on FinViz. Dividend is 12.7%. I mean, PXD, they had their earnings. They did well. Not crazy good, but they did well. It's on the downside right here. I just kind of think, again, when you look at the 52-week, their 52-week low is 190. They're only 7% above their 52-week low. Their 52-week high is 274. I think energy is still in play. The PE is not crazy at 7.32. The forward PE is not crazy at 8.26. I just think energy is still in play. This one is down 10% year to date. Energy is doing horribly year to date. And the reason energy is doing horribly, everybody thinks we're going into a recession. In a recession, oil and energy just gets knocked down. So that's kind of my reasoning on that one. TrendSpider posted a chart yesterday of QQQ. The last 4 times the NASDAQ saw a bearish MACD cross above the 0 line, it was a signal that the Qs went down. Yesterday, it got another one. So if we look at I think it's on a daily. See that cross down, the bearish MACD cross down right there just a couple of days ago on the 17th. That's bearish. The last 4 times on average, let me open up this picture. And the last 4 times on average, you saw about a 15, 11, and a 4% decline. So the 4th time, you still haven't seen the full down, but it crossed down at 301.07. And that was where essentially on this algorithm, they started a short. It was just a bearish MACD above the signal line. Above the oscillator, the 0 line, not the signal line, the 0 line. So that was interesting to me because that would mean for QQQ, you still have more room to go down. So that would mean buying SQQQ. Today, NVIDIA, I said NVIDIA was going to run the market. NVIDIA popped the market. But this is an interesting one in that it is daily. It's a little bit longer. So SQQQ might be your take on that one. mRNA, Moderna and Merck. They announced a melanoma vaccine that works with Merck's Keytruda, I think is the name of the drug. It extends, it is seen as 44% more effective than just Keytruda. But there are people that are basically yelling that because Merck's patent on Keytruda comes up, there are people saying, hey, look at the patent, blah, blah, blah. That's why they're doing this. They can extend the patent, blah, 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 the whole thing. So right now, Moderna is down 3% in pre-market. The only thing that this could do, if for some reason Moderna comes out, there's 2 things. Remember, these guys are hype masters, and they had their earnings. They announced pre-market. They're down at 158. That's probably why. But they're hype masters. So they had to announce something around the earnings because the earnings were going to be bad. I would say wait for this one, but I think I've got it in my core portfolio, but I've got it as a trade in the core portfolio. I don't currently own this one. The reason is because the algorithm, your average win is 18%. So if you can wait for this one to come down, you can average it about an 18% win. On the opposite earning signs, BABA. announced earnings. BABA is a buy on anything under 100. Right now it's trading at 145 cents. I would say anything under 100, you get this one. Their earnings are in. The MACD hasn't crossed up. The algorithm has you out. I would say buy it under 100. The 200 days right at 90. Yesterday it closed at 94.80. Probably should have said something before that. But under 100, if it dips under 100 today, I think you could buy it. And just buy it going long. Costco is under $500. $497.26. Just figured I'd tell you that. The 200 days still at 489. I don't know that I'd necessarily buy it here because it is sliding. Your earnings are coming up March 2nd. Retail has been hit a little bit, but you do have gaps up here at about 531, 536. If they give some type of great guidance or if they up the membership charge, you could see a pretty good pop in this one. So you do have the danger of the downside gap at 450 to 460, but whatever. Okay, before I go into the scans, I want to address a question that came up in our private Facebook group about margin. Should you use margin on a smaller account? I will preface this with this is a boomer rant. Remember, I'm old, guys. I am old. But I started at that small account the same thing that you were. I posted a response. I said, never use margin. I abide. Remember, I do a fire podcast as well, which I haven't done in a while. I need to start doing it again. But that's financial independence, retire early. And part of getting to your quote unquote fire and retiring early is understanding that if you can't afford something, don't buy it. And that goes for stocks. The only debt you want to take on, and Dave Ramsey teaches that no debt is good debt. I teach there is good debt. There's a couple of good kinds of debt. The first debt that you want is a mortgage. In my mind, I don't think renting gets you anywhere. It is significantly easier to rent because you're not burdened by the headaches of a pipe burst, of a floor that needs to be replaced, of a leaking toilet. Say your air conditioner gives out, something of like that. You're not burdened by if you're renting. So there are benefits to renting, but in my mind, I was always taught housing is a good step to financial freedom because housing has traditionally always gone up, other than 2008, where it dropped about 20%. And people started buying real estate like crazy, made a lot of millionaires, blah, blah, blah. You're in that realm now where housing has dropped, so people are starting to buy. You're seeing it on the DRN and DRV. But going back to margin, if you can't afford it, don't buy it. You should be paying yourself. If you have a small account, say you got an account of $2,000, that $2,000 should only grow by about $200 every year. But instead of just realizing that it's not going to go from $2,000 to $4,000 overnight, rather than buying a latte, or maybe you bring your lunch and you save $2 a day. So at the end of the week, you've got $10. Take that $10 and put it into your portfolio. Put it into that $2,000. Pay yourself. Identify that you're the one that needs to get paid. Do not use margin because here's the thing. What we've seen on the markets is when the markets go down, that margin call becomes real. So for $2,000, say you take out $500 in margin. Say you take out, I don't know how much margin they would give you on a $2,000 account, but realize they're hoping that you basically get $1,000 in the hole on the margin, and then they can call in a margin call and take the money. Take the stocks, liquidate your assets, boom, they've made their money. That's essentially what they're after. So I would say do not trade on margin whatsoever. Doesn't mean it hasn't worked for other people. If you're an experienced trader and you actually understand stocks and you have a 70%, 60% win rate, track your win rate. But in my mind, I was at that $2,000 or $1,000. I remember I had a $500 portfolio. At that point in time, it cost $50 to actually make a trade. So my $500 went into an S&P tracking fund. And essentially it was just there, and I didn't trade it. It got to about $1,000 because I kept adding to it and kept adding and adding and adding. And every time I would add to buy something, I would have to basically pay $50. So I've been in your position. It's not a quick get rich quick kind of thing. Margin can absolutely make sense in certain times. But I would say if you've got a full-time job and you're trading on margin, you're rolling the dice. I mean, just gamble on sports. It's kind of the same thing. But again, if you're an experienced trader and you have an understanding of it and you can get in and out pretty quickly, go ahead, use margin. There's a reason Robinhood is going bankrupt. Not because they don't have margin people. It's because most of the margin people have moved to other brokerages, and they understand that margin was just something that was fun. And a lot of accounts, it's kind of been proven, a lot of accounts with Robinhood went to zero. And so these guys just don't have the trading that they have. It wasn't even that they moved brokerages. It's just that the accounts went to zero because there were margin calls. So just be careful. I would say no margin is good margin. And I wrote in my response, I still remember that $500 trading account. I think it made its way to about $3,000 when they started lowering the cost to about $10 per trade. And I got to about $3,000. And I remember I had a $500 trade. And, I said to myself, and this is what, 40 years ago? Almost 40 years ago, probably 35, maybe 30 years ago, between 30 and 40 years ago. But it still sticks in my mind. That $500 trade that I made, I went and I bought a stereo for my car. Imagine what that $500 would be today. So I from that point forward, I didn't make decisions like that. So I basically went and I said, okay, I'm going to be a little bit more methodical about my investing, about putting my money where I think it is. And again, even $10 per trade. Imagine every time you traded. So you buy, you paid $10. You sell, you paid $10. You buy, you paid $50. You sell, you paid $50. So there's a lot of benefit in the market now that you guys have that none of us who are older had growing up. Wanted to bring up a couple of scans that I saw, and I hope I'm not missing anything. I went down my list here. Oh, earnings. There's a couple of earnings today that have come up. Melly, after the bell, which is one of the podcast sponsors, by the way. And FYI, I don't get paid for this podcast. Absolutely don't get paid. I do this 100% for free. There are 3 ways that I make money. There is the TrendSpider. I'm an affiliate with them. So when you sign up for TrendSpider below, I do get an affiliate portion of that. The second is Visible. And I want to thank everybody who signed up for Visible. I woke up one morning, I think this week, and wow, I had a ton of Visible subscribers, like referrals. There's a link down below because I do say that the podcast is sponsored by Visible. All I get is money off of my phone bill. It's the same thing that you would get referring your mom. So I get money off my phone bill, but it's more cachet and makes me have a little more clout if I say we're sponsored by Visible. But I get dollars off my phone bill. You get $20 off your first phone bill. I get $20 off my phone bill. So thank you for everybody that signed up. And the third way that I get money is from Anchor playing ads. That's it. Other than that, when you guys tip me, those are the four sources of income for this. So the amount of work, I usually put in about 6 hours. I would say it's 6 to 7 hours a day between research, which is stuff that I would be doing anyway. My goal is to educate you. We're not in a competition. I'm not looking to, make a fortune off of this. But just to be perfectly clear, that's how I get paid. That's all that I want to get paid for. I don't want to do anything else. I don't want to, the only reason I do the Fire podcast is to try and educate. I'm not looking to get rich off of this stuff. I did have my second, somebody here in Atlanta. I was sitting down at a vegan place and they walked up and they said, "Hey, are you Gary?" I said, "Yeah." At Miss America, I got noticed as well. But yeah, somebody said, "Oh, are you Gary?" I said, "Yeah." So I've gotten 2 people noticing me.
So Melly has earnings. This is the Amazon of Latin America. Right before earnings, ironically, you have a cross up. Now, I don't think that they're making money. Let me look at them real quickly. No, they are making money. It's just a 210 PE. Huge PE. No dividend. They're up 32% year to date. So they do have earnings coming up. You can read about it. New Street resumed coverage. The average price target is $12.83. They're trading at $11.18. So that's a little bit expensive in my mind. If we take a look at some of the buys, looks like most people bought on the insider list at about $900. There was a sale at about $1,000, but that was back on March 7th. Nobody's really bought anything since March, so probably not applicable. But I would read the article, What's in Store. But they do have earnings later today after the bell. Let's see. It is post-market on February 23rd. So that's today. Melly has earnings. One thing that I wanted to bring up too, somebody asked me, and I forget who it was, but to look at Square. And what they wanted to do was sell before the earnings and then hopefully buy when they crashed. The algorithm got you in at $80, got you right out with a slight 4% loss on a day where the market was just down. This is a run from 61 all the way up here to 90. So a good run got you out with a 23%. The algorithm just makes you what you would if you bought and held. 62% loss on this one in the algorithm over a 2-year period. 67% loss if you just buy and hold. Square is one that, in my mind, this MACD is low enough. Let me look at PayPal real quick to see when did they report as well? PayPal reported, and you can see PayPal reported, and it's just continued to slide. They probably gave weak guidance. I would say that you're coming up on a MACD cross up here on PayPal. I would say that you're coming up on a MACD cross up on Square. I don't know why I'd think that Square would have some type of positive news or something positive when PayPal is already reported. It is well above its 200-day. The 200-day is at 66. You got gaps all the way down. I don't see a ton of gaps on the way up. I don't think that, I personally hold this one at a significantly higher price. I think it's around 140 is my average purchase price. I've been buying some down here, like 1 or 2 shares, not tons. But I did have a big position at the time, significantly before. I mean, if we take a look at a weekly chart of this one, I had a position that was purchased right around here, probably 150 or so. So I do need to probably add to my position. I'm just not looking at this one as oh my God, it's going to pop. There's a lot of competition in this space. They're not making money. They're up 16% year to date. Downgrade, the average target price is 90 when you're trading at 72. That could go down based on their earnings. You can see sales all across at 50, at 60. Nobody's buying this one from inside. Everybody's selling from the inside. And they're selling large dollar amounts too. Here at 80, 88, they're selling huge dollar amounts. So I think your cap is probably around the 80s. But I think they probably know something's up. I would say at very least, if you're looking at the 4-hour, your floor is the 200-day at 66. So 66 is, you're trading at 72. You still have $6 to actually give back. That would be my take on Square. BABA reported earnings, and I think I went over this one. $100 is the pivot point on that one. RVLV, which is Revolve Group, they have earnings, and the only reason I bring this one up is because it's kind of like Square, but it's right on that 200-day. And you could see this one pop from about 24 to 26. I think you could see that on a good earnings pop. RVLV is the one that I'm looking at. Their PE is 23, so it's expensive. It's an internet retail. I think this is a beauty manufacturer. Yeah, online fashion for consumers. Revolve and FWRD. You can see sales from insiders from April around 52. You haven't touched 52. So I do think that there's an opportunity for this one. Year to date, you're up 14%. Your average target price is $26.94. So I do see resumed coverage on February 7th from BTIG Research, and their target price is $35. So read the Motley Fool article, 3 growth stocks for the next 10 years and beyond. That probably would give you a better idea. But I saw this one and on the earnings, and I said, around the 200-day, it probably makes sense on this algorithm with that RSI down if they report something good. Now, again, you got 22 cents back in August. You got 16 cents in November. So it's been on a bit of a slide. So be careful, but I did see those. That's the earnings, the 4, Melly, Square, Baba, and Revolve. Melly, Square, Baba, Revolve Group. Let's go over scans. The first one with a cross up is Pan W. I own this one. I own it in a big way. I own it right. I think the average purchase price I have is about 180 because I bought in at about 183 in a big way. And I brought it down by buying a little bit here. This is part of our core portfolio. They're making money. It is a good business. Nobody's cutting back on their cybersecurity. People are adding to it. And any CTO that's cutting back is crazy, out of his mind. But Pan W crossed up. So you're going to get a cross up here. It's a secondary cross up. The initial cross up was here on December 30th at 138. Imagine you bought that at 138. It's a good stock. Pan W. We went over Boyle had a cross up. So Boyle is, and it popped. It's at 504. So the market hasn't opened, but they've run this all the way up past $5. So again, I think you've got good positive movement on this one. Boyle. Another one, I hate the stock, love the company. And the only reason I'm bringing this up is because I hate the stock, but I love the company. App Harvest. They do organic fruits and vegetables in a controlled environment. This is one that we've discussed before. I think somebody from New Zealand brought this up to me, and it was years back, or a while back last year. I think it was around the August earnings. And she had said, I bought this at around $2.97. It's run up here, and I want to hold it through earnings. And I said, just don't hold through earnings. I said, it's an expensive business to be in. They're losing money, blah, blah, blah. We're down at 94 cents. This was interesting, though. December 22nd, you were at 58 cents, and that was where it bought in. You made 150% off of this one. Now you're at 94.14, and their earnings are coming in at March 9th. You've got a huge dip in this one. Read up on it. They're not making money. Again, I love the company. Hate the stock. Social media, pins crossed up. PINS. This is Pinterest, 25.27. The MACD is well below the 0 line on a cross up. I think this one could run to 27. Their earnings are already done, so you don't have any quote-unquote catalysts on this one that are coming out. But I do think you've got an Elliott Management, I think, is the investor in this one, where they took it over around here. I think in November was where it was announced. That's where you're seeing the gap. But it's hugging that 200-day, and you can see it's using that 200-day as quote-unquote resistance. So I think 25, 27 on pins is good. A business that I've said any reaction in the market is an overreaction. But that doesn't include bad business. And Lyft is losing money. Ride sharing has become significantly more expensive. They're having trouble getting drivers. They don't do food. They just do ride sharing. That gap that you see between 15 and 1186, you can see right after earnings, they kind of climbed a little, and then they've lost. They don't have confirmation. The RSI is down 31. I just don't see anything, but you do have a cross up here at 1075. This is an interesting one because there's no catalyst. You're just looking for the reaction for it coming back up to its 200-day to $12.78. That would be a nice 20%. But I can't be a good investor and think that, hey, it's just going to go back up to the 200-day, because you know what? That 200-day could come down to that stock price, just if it kind of flutters like it has. But 1075 lift went up. And when I say you can't make a good business, Lucid reported yesterday. There was a bunch of Tesla news about Tesla keeping their engineers in California, and Elon kind of making a statement with Gavin Newsom, who's the CEO. It was kind of ironic that they did it on the same day that Lucid announced earnings. Lucid, Peter, I forget his last name, the CEO. He's the guy that designed the Model S. He's the CEO of Lucid. The only thing you're hoping for, I think that Lucid said they had like $1.4 billion, which gets them to July. So if they can't turn a profit by July, they have to raise more money. And where are you going to get that money from? The reason you went from 6 all the way up here, and on this day in particular, which was January 27th, where it ran all the way up to 17, the rumor was the Saudis were going to take them private. The Saudis have the money to actually buy back all of the stock, and they would have to buy it at a pretty good, positive thing. But they're not making money. They have trouble with deliveries. This is a $120,000 vehicle. They don't get subsidies from the government. They are launching lower priced, but you are currently in a production crunch, and they can't produce the vehicles. They can't deliver them because nobody wants to pay that price, and they can't produce them fast enough. So that's where I would say, take a look at Lyft. It's just a business that's kind of dying. Take a look at Lucid. It's just a business that's dying, and try and understand, you can trade around these, but I would be careful. And boy, let's go over to Active Trader Pro, Boyle. Boyle has all the confirmation in the world right now as far as like the current 5-minute. Oh no, it just died. It's trading at 501. So interesting to see all of this. There we go. It does have all the confirmation in the world. Southside's Bollinger Bands. So as we head into 9 o'clock hour, Boyle has a good run going at $5. If you have any questions, hit me up. I'm going to keep it to 40 minutes today. I am trying to get outside. If you made it this far, hit the thumbs up on the YouTube. If you made it this far, just rate me. If you did make it this far and you're listening on the podcast, go over to YouTube. There's a link tree down below. Just go to YouTube and hit subscribe. Nothing more than that. You don't have to like a video. You don't have to watch a video. Just hit the YouTube thing and subscribe. You'll get my videos. I did a 1-minute look at Boyle and KOLD yesterday. I continue to say if this thing holds $5, you're in an upward trajectory. If it goes below $4 at any point in time today, then KOLD has all the kind of momentum. So, but go to YouTube, watch that video. Just hit the 5 stars. And again, if you want TrendSpider, the link is down below. 25% off. I think they had 35% during President's Day. If you want access to my algorithm, I just give it to you. I mean, I just help you set it up. You can use that as a guide. The 65-minute algorithm is outlined on the YouTube video, which I did with David Yoakum. If you have any other questions, and if you want a phone service, down below, visible, $30 a month. It's great. I use it all the time. And you guys know I walk 10 miles a day. I have the same service that anybody paying, $80 a month to Verizon has. Same service. So I will talk to you tomorrow. Have a great day. Export. Yeah, because shippers get to charge more, Brian. Okay, I got to go look at your comments. But because you guys are chatty again this morning, man. REI, we went over that one. Octavian. Hey. Welcome, Octavian. Sorry I didn't see it until now. Hopefully you're still listening. You're still here. William, happy Thursday.
Pfizer, Brian, I went over Pfizer. Pfizer's a funky one. And it's just from I took it out of our core portfolio just because I think I'm going to put in XLV. But Pfizer continues to slide. There's some pretty good controversy going on with Pfizer. I would say Pfizer, if you currently hold Pfizer, I think it's still a $50 stock, $47.50. I still think you're going to get some hype run up to 50 on Pfizer. Let me look at what was the other one you put? ALGM. But Pfizer, I mean, that's a long-term one. ALGM, Allegro Microsystems, you got the button hook happening. You're too far above the 200-day. I mean, buy it at the 200-day. You're at 43 right now. Let's see, ALGM. Let's see what the monkeys say. Target price 41.71, and you're at 43. 55. It's a semiconductor company. Everybody initiated coverage at a $30 price target. They probably mentioned AI. You can see February sale at 42. Everybody's selling. Nobody's buying. Ooh, who's that, Penny? I'd be careful with that one. That one looks like a hype rally to me. But yeah, their earnings are 24 cents a share, 31 cents, 35 cents. It's definitely a micro cap though. It's only got an $8.3 billion market cap. That's not very big in the semiconductor industry. Brian, I would suggest staying away from penny stocks. I know more people have lost money in penny stocks than made money. Doesn't mean you can't make money in them. What was it? LUNR? I think that was the one I just looked up. Intuitive Machines. You're trading at 86. I think earlier it was at like 90. So this is one that has gone crazy. I like that Justin called him Zeppelin. I love that. AITE? I don't even have it in the sim. Oh, you say, all right. I get it. So, and I think I've said this before. I said this yesterday on the oil tankers rig. Rig announced earnings. I said, hey, wait until earnings. Don't buy it up here. Rig came up. It was going to pull back. It's pulled back. They announced their earnings. They went down to 6. I think you're looking at this one going back to 7. I mean, they're going to announce that they're making a ton of money. The problem that you have with Transocean, they're shipping oil. That's mainly what they do. But look at that RSI down at 27. The algorithm doesn't have you in, but it's putting a nice floor there. Let's see where the actual support might be. Let's go long term. Let's look at a weekly. Yeah. I mean, $13. It's not crazy to think that you could go back up there. But look at the earnings. I mean, their earnings are just going down. They lost 4 cents a share. Last time they lost 4 cents a share, you were selling up here at about $13. And it's just been a slow slide. So
Luna. Morning, Larry. Oh, Jim Cramer is interviewing Jensen Huang because he named his dog NVIDIA. What a douche. I hate that guy. Rule number 2, don't listen to Jim Cramer. I'm going to move you over to Active Trader Pro. Boyle still running. 515. Boy, the guy who bought 11,000 shares, he's doing well. On Monday, February 27th at 3 p.m., may cause account creation to fail temporarily. We apologize for any inconvenience. Scheduled maintenance. I have a lot of people that don't listen to episodes. Browse. I might get going before the market opens. Hey, if you just got here, hit that thumbs up button. Just make sure to hit that thumbs up button because it does help. I need 1,000 subscribers. Which one? Rig? Oh, WTI. Oil's being kept. Here's my take on oil. Let me just get a happy sound. I haven't used Pico in a while. I like swapping tubes. Here's my take on oil. Oil is manipulated by governments because oil is hugely important to UCO. I like UCO. Here, hold on. Let's go over here. I'm going to bring you back. I like UCO. UCO is triple levered to US. USO is single levered, I think. UCO is triple levered or double levered. It's an ultra. But UCO. Take a look at UCO here. Now, mind you, what's crazy is this is what's nuts. Let's take a look at a weekly. Because over 2 years, UCO has actually made you 80%. The algorithm loses you 40%. So you still have a gap up here at 50. Doesn't mean it's going to hit it because remember, it's a levered, it's a depreciating asset. So I don't know that it's going to get back to that 55. The real question is, do we have a recession? If we have a recession, oil and energy just gets beaten down. That's essentially what it is. There's no other ifs, ands, or buts. It just gets beaten down. And so if we take a look at UCO, and it is a decaying asset, so it does go down. But let's take a look at a monthly. We'll take a look at a monthly so we can go back to 2008, 2009, where you saw the last recession. It just kind of came into fruition in 2009, so you can't see. 2018 was probably the last recession that you saw. The December. Look at that. October. I mean, that was the fastest recession we had with the rising rates right there. And look, you went from 220 down to 76. Within 3 months, you went from 246 here in October to, by January, your low was 78. In December, your low was 76. So you went from 250 to 75 in the last recession. So do I want to say that if we go into a recession, 25 is crazy? No. I mean, if you go into a recession, you're probably coming back down here to 8. This was where I got screwed. April. I invested at about 20. I want to say I probably got in here at about 20. I got in late March. By April, I was down to $2.75. Now, I could have held it and come back to that. It's just about at the $20 mark, 27. I could have held it and made, but I just took my money out, took my losses. I think about 100 grand. I think about 120 went down to about $20,000. Took my $20,000. I put it into Apple. I put it into Tesla. I made the money back somewhere else. That's what, in these decaying assets, you just, who would have thought April was when oil went negative? And remember, they were paying Transocean for the ocean liners to keep it out there in the ocean because they didn't have enough places to store it. You're at 520 on Boyle. Boom. Boom. Okay. Bum, 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 bum. I'm going to put in QQQ. And then we go here. Jensen. This is Jim Cramer. I love what you do. I'd name my dog after you. I'm the only one with the dog that can be allowed back in to your place because he's named NVIDIA. Episodes. I love that I say it was sponsored by TrendSpider. What am I going to name this episode? I focus on Boyle, KOLD, CRM, BBBY, LUNR, EPSN. I'm sorry, Corey, by the way, if I did ESPN, if you're listening. Horribly. Oxy, Devon, PXD. I'm going to buy those 3 today, by the way. I think energy has hit a good amount lower. Melly, Square, Baba, RVLV, mRNA. I don't want to put mRNA because I always get a COVID warning when I put that in. Cost. Let's see. Margin. $223.23. Bum bum bum. Schwab, man. I just it's funny because I was listening to a podcast yesterday. Published now.
about God, I hate fucking Jim Cramer's voice. I was listening to a podcast yesterday about Fidelity, essentially. Oh, I need to go to episode. Buying in a bunch of crypto and allowing clients. And I had a good call with Fidelity where I have to call them back. Is that what he's saying? Is he? I hope he's not saying sell everything, but I think I've got Boyle already. Yep. I've got LUNR. I've got that one. Oxy. I'll keep BRKB in there. Okay. I think I already went over. Already included that one. Yep. I have cost in there. I'm going to keep Pan W. Boyle is out. App Harvest. Pins and Lift are the only two. Okay. And then we're going to go to pins. We'll go Tesla, LLAP, INTC, SOX, HYG, AMC, AMZN, PLTR, CR, BBBY, F, AAPL, UVIXI. I didn't bring up UVIXI because UVIXI is down. SPTI, SOXS, BAC, ITUB, UNG, EEM, SWM, NEO, IQ. We're just going to tweet that out. Okay. I don't know if I even get listens off those.
I've been a part of District 196 schools now for 10 years, and I'm going to give you a glimpse today of what's actually going on inside these schools. Despite the board's attempt to deny it, District 196 schools are quickly becoming a place where promoting activism is actually more important than promoting education. I'll take you back to my first day at RHS this fall. The principal came out and gave us a heartfelt speech about equality and standing together. He began to list countless races, such as Latino, Asian, expressing how much they matter and how important they are. But never once did he mention a race or identity that reflects me, or half the kids that were in the class. Now, members of the board, I know you haven't been to school in a while, and I know I know none of you, or most of you, don't have any kids left in the school district. But you must admit how uncomfortable it will be to be characterized just by your skin color on the first day of school, and be thought that you were wrong just because of your skin color. So I'll never forget the look one of my friends gave me from across the room as we were sitting there listening to this blatant bias being expressed in the so-called equity statement by the leader of our school. To be clear, I don't need you to tell me that I matter, but hearing the condolences given to other races and leaving just one race out, it inevitably you'll start to feel like you've done something wrong. And in our principal's attempt to unify us, he instead created unwarranted boundaries and barriers between his students, pitting us against each other based on characteristics that we can't control. In another separate instance, I was told that writing "All Lives Matter" on the whiteboard was political and could be seen as offensive. When I questioned the teacher after class, she told me that she didn't have an answer and she just had to erase it, and it was quickly erased. There are political signs all over RHS, about specific races that matter, specific sexual orientations that matter, and specific perspectives that matter. But when I questioned the RHS administration about how these signs were political,
Here's what I'm watching.
they were supporting human rights. So when I questioned why the equity statement couldn't represent all students, they told me that to even ask that question was outlandish and offensive. And when I asked why that was, they told me, quote, "Whites have a pretty good situation right now," unquote. So is that not racism? Disregarding my question merely because of the color of my skin. To be honest, after enduring a year of the people in charge telling me that I'm a racist and I'm privileged and pointing out our irreversible differences, I've never noticed race more. And it's becoming the first thing I notice when I meet someone, which has never before been the case. RHS administration confidently told me that RHS students and staff are happy with their equity statement. But from my experience in talking with other students, this is not the case. I know many kids who disagree with their teachers, but they're too scared to stand up because they're worried that their grades will be docked and their learning experience will be affected. My honors government teacher...
I find this kid offensive. There's a better way to put it, kid. That's all I would say. Let's see. Mike, take your shirt off, take a hit of the vape, and calm down from the Kramer rant I had to put in Friday. Tomorrow, you know what I think I'm going to do tomorrow? Honestly, I think I'm just going to do a look back at our core portfolio. Let's see. ALB is one. Albemarle. God, if you got into this one, I had said, hey, hold off on this one. I didn't think it was going. It's not a bad one, but it's super expensive. And there is, here's the thing. They're lithium and they're go forward. It looks good. I mean, their target price is $315. I mean, their EVP just sold at $220. December, $280. These guys are selling at $322. And not small amounts. I mean, you're talking $2 million from the EVP, Chief Admin Officer. So I do think you had this golden cross here. Let's look at the daily. Because this gap up here, I mean, the gap, when you look at a 4 hour, let me run the algorithm. Because when you look at a 4 hour, it just moves quicker than the daily. But you can see
this gap provided actual resistance at about 295 or so. I would say, I thought that we were going to fill that gap. I think I looked at this one probably in the middle of January, the end of January, right about here. I would say you're in danger of hitting this gap down here at 201. Honestly. I mean, that's the slide I'm looking at. If they gave lukewarm guidance, James, I mean, let's pull it back to where that gap. Let's see how many people are holding. Nobody's holding down here. So everybody's gotten out. So your support right now, from a volume perspective, is still up here. It's not down here. So it may get a magnet back up. But I'd probably wait for that MACD to turn a little bit. Let me see. Is there a fair gap? Let me see. Fair value gap. Let's apply it. Justin with the fair value gap. What does fair value gap do? TrendSpider blog will have it. Fair value gap basics. Fair value is called the fair value. In this article, we're going to go over what fair value is. Understand, before we get into utilize fair value gap, let's first talk to the fair value gaps are most commonly used amongst price action traders who are defined as instances in where there are inefficiencies or imbalances are created with 3 candle sequences that are commonly visualized on the chart as large candles whose neighboring candles' upper and lower wicks do not fully overlap the large candle. Wow, this is nice. See? I knew when I got you guys into freaking TrendSpider, you guys would teach me stuff. Justin, high five, man. I like this one. So, yeah, let's look. You still haven't covered it. Down to 239. I don't know how this gap reacts. I know that the price gaps here are like magnets. But I don't know fair value gaps. Created by large buying pressure, we would use the following criteria. Price low is created. I'll have to read through this. There's a video on it. Learn the basics of the fair value gap. Yeah, but Justin, you got to realize I'm just, I'm learning just as much as you guys learn. I have a little bit keen eye where I can see stuff, but like small caps, like where James trades in a lot of stuff, I can identify looking at the chart, but I don't know the companies. Google at 92, 100%. It's under 100. I don't think it's a bad one. Look at that price. Look at the price action gap here. I like that. I'm going to take it off though. Where is it? Fair value gap. There it is. And look. It actually lists it for you. The dollar amounts. So the fair value gap actually lists the dollar amounts on the chart. Justin, not all gaps need to be filled. Not all the time. I was taught that gaps are like magnets. Magnets sometimes get close, but if they're the same polarity, they will expel. So think of gaps as magnets. Sometimes they attract. Sometimes they're used as support or resistance. It's all questionable because, never listen to a guy on the internet. But I like that one. I'm keeping that one in. Let's see. Zephin, man, I bring up LUNR, Intuitive Machines. Let me look at LUNR. Hold on. Let's go. That one doesn't even deserve LUNR. I mean, Active Trader Pro isn't updating on LUNR. I love Pepsi. I love Pepsi as a stock. Holy shit. So LUNR just opened, and the day range is between 83 and 97 already. Somebody got in and bought at 97. Somebody put a market order in at open. Dude, natural gas. I mean, look at Boyle. Boyle is at 530. Remember, I thought it was going to open up at 4. It dipped back into the 4s. 480. It got all the way down to 465. But look at that. I'm not trading it. I like buying on down days, not up days. But like I said, NVIDIA was leading this market. NVIDIA earnings up. All of a sudden, market enthusiasm is great. We're making money. We're in this. Blah, 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 blah. Bank of America is going back over 35. Your TQQQ is probably going back to 25. And then we'll get shot down again. Goldman Sachs is up 1%. Devon's up 1%. Cleveland Cliffs up 1.5%. Our core portfolio, Qualcomm up 2%. QCLN up 2.5%. Taiwan Semiconductor up 4% to $90. Exxon up 1.12%. SOXL, yeah. Here's SOXL on the algorithm. I mean, if you don't get back to 1420 on SOXL, you got a gap. You've covered this gap. You've covered that gap. You covered this gap. Let's see. Do you have gaps above? You got a little gap here at 32, which would be quite a move. But see, look, 200 day moving positive. 200 days moving positive. Just be careful. I mean, again, I think you've got more bad news in this market than you've got good news. Earnings have to come down. UNH, back down to 485. It went up to 500. This candle, 493. I think this was where I bought it. And so it hit 505. I should have sold, but it's a long term. Yeah, nat gas, I think, bottomed out. Just be careful because that stuff can turn. I still think long term, there's a lot of pressure on nat gas to be positive. You're at below pre-pandemic levels on nat gas. That's what I heard yesterday. Okay, hit the thumbs up button. I know I got a bunch of people watching me, but I'm going to go out and enjoy the day before noontime. You guys, hit the subscribe button, hit the like button. Go watch my video on Boyle. If it holds 5 today and it closes above 5, you got a bull rally. I mean, you're probably going back to 10. But Alibaba is under 100. It's at 97. I think you could buy Baba. Oil prices going high. Natty Light, man. Oh, I tell you what, Natty Light, I think that's what we had on Hell Night at the fraternity. They microwaved that shit. That was horrible. God. Whew. I'll show your comment. Zephin, be careful with REI. REI's, in my mind, I think there's better places to throw your money in energy. I just don't know enough about REI's business. I know enough about Exxon's business. I know enough about Chevron's business. I know enough about PXD. I know enough about Devon. I know enough about those big cap ones. It's the small cap ones, man. I'm out, fellas. I will talk to you guys tomorrow. Hey, I'm glad you guys are doing well. High five to everybody. Remember, the tip jar is always there. Tip jar is back. In fact, I got a tip this morning from somebody who probably shouldn't have tipped me. Probably should have put the $5 back into his account, but I certainly appreciate it. I see, and here's the thing, James. Schwab, I like. I'm the client that Schwab wants. The big money is what Schwab wants. I was tempted to go to Schwab. I've had Schwab in the past. The only reason I was going to go to Schwab was because of their line of credit services through their bank, where they were going to give me money, and it's not margin. This is line of credit. So it's I would basically be buying $1 million of VOO at a 1% annual rate. That makes complete sense to me. That's the only reason I would go to Schwab. So I get it. While a lot of folks are. Where's Fidelity? What's Fidelity's? See, I get all their damn. Let me see. Fidelity stock symbol. FNF. Let's do this. Seeking Alpha. Because I think I can compare charts on FNF. I think I can. I don't think I have to be a member to compare. Add comparison. Schwab. Let's do this. Compare. So here's Seeking Alpha. I found Seeking Alpha a little bit better than CNBC.com. Here is, oh, come on. Add comparison. Why isn't it doing it? It doesn't like Safari. That's what it doesn't like. Ugh, let's do it in CNBC. I need to go into Seeking Alpha and actually sign in and stuff. But let's go to... Oh, come on. I hate CNBC.com. Schwab. There we go. I like Google under 100. I want... Oh, God, I hate this. CNBC, man. Schwab. We'll click on that. Okay, show me the chart. And then we'll add in a comparison. And I do have some insider knowledge of Fidelity because there it is, FNF. Come on, CNBC. There we go. There's FNF. And let's go to a 1 year. Let's see which one compares better. This is what I want to see. So your Schwab is, let's go to 5 year. Fidelity's down 11%. Schwab is down 5% over 1 year. We'll go to a 5 year. And this fucker doesn't work. Fuck this. Motherfucker. Now I'm going to get screwed because YouTube's going to say you cursed all the time on your live stream. F you. Okay, I'm done. I'm done. Last look. Boyle. 522. It's kind of leveled out. I might put in and buy at $5. The rumor is that SGML is getting bought. That's the rumor. Let me go back to Safari. I like FNF because I think Fidelity is going to be the first one to actually include. Wow, they got killed on earnings. I think FNF is Fidelity National Bank. Let's see. Yeah, I'm pretty sure that's what it is. Fidelity National Financial. I think that's what it is. But they will be, I mean, they're looking to cover this gap. Let's look at the fair value gap. Ooh, looky. There's this one all the way down here. I got to watch that video. I like that one, though. I like that you brought that up to me. Okay. I'm out, folks. I know I say goodbye all the time, but this time I mean it. I'm going on my 10-mile walk. I'll see you guys tomorrow. Tomorrow I'm going to do an episode, I think, just based on the core portfolio tomorrow. We'll take a look at the core portfolio stocks and stocks that have had a crazy week. James, yeah, of course I want to talk to you guys. I love this shit, man. I love talking to you guys, and I love talking stocks. I geek out on it. My friends, we go on hikes, and they'll ask me about stocks, and I'll tell them, and I just geek out, and half the time I look back, and they're on their fucking phones. So, I love this stuff, though. Okay. Hit the thumbs up button. Let me know what you guys want. Sign up below. Hit the subscribe button. Leave me a comment if you want me to look at a stock. SGML. Let's see. This is TrendSpider. This is my 4-hour algorithm. I'm gonna get rid of the gap since that fair value. Careful, man. SGML is expensive. I mean, look at the volume's trending up, but you've had a severe volume drop. Your RSI's at 63. Here's what I'll do. Let's go to a 5-minute chart on SG. Look at the 5-minute chart, man. You had a gap here between 29 and 32. I think your support level is the 200-day if you want to know the look how it bounced off the support here yesterday. Your 200 days your support at 33. I'd put in an order for 33, 34. 33, 33 to make it. Justin, I think you sent me a strategy yesterday. You know what? Let's look at the 65-minute on SGML. Let's look at, this is so you're in at 33.45. Again, 33.35. I think that's your 200-day. I think you put in the buy there. I think that's your support. This is a 65-minute algorithm. So essentially, when you cross up on the 8-day EMA, it enters to buy. When you cross down on the 8-day EMA, you sell. Now, we'll go 2,000 candles, which I think is almost 2 years. On this one, because it's been a crazy flyer, lithium has just been crazy. You make 280% by holding the asset. In the algorithm, you have 185 positions, and it's over 1 year. Sorry, it's over 1 year. So 7 candles a day, and this is 2,000 candles. But you have 185 positions. You win 39% of the time. Your average win is 5%. Zephan, I'm still waiting on my MLS starts Saturday. I think the season starts Saturday. And so my boss is working with all of the stadiums right now to get all of their credential stuff up and running. And then I should have my schedule finalized. I think I'm coming out in April at some point. So I'll let you know. We'll meet up. You can meet my partner, Nikki, who yells at me constantly. Gary, you don't know what you're talking about, Gary. She's from Sri Lanka. You don't know what you're talking about, Gary. You have no idea what you're talking about. Yeah, I'd say, James, if you want to get into this SGML, I don't think it's a bad play. It's expensive, I think, up here. Let's see. SGML. Yeah, they're not making money. Their forward P is only 7. They're up 23% year to date. Everybody initiated coverage, $14 price target there at 35. So, I mean, it is expensive, but if Elon takes it over, you're probably looking at a $40 stock price to take it over. So, okay. I hope you guys make a ton of money on Boyle, which is at $5.20. I think it's settling it at between $5 and $5.20. I don't think that's a bad place to buy.